The following is a presentation of TFNN.
Next up, we're going to go to Florida, Titusville. Nick, thanks for hanging on the line. How you doing today?
Hi, yourself, sir?
I'm doing well.
Ken, I want to say I'm 84 years old, and the way you explain things makes it very easy to follow.
That's very nice of you to say, Nick. I appreciate that very much.
Have a good day, sir.
All right, you too.
Live at TFNN. Breakout Investing with your host, Ken Shreve.
Good afternoon, friends. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you. Happy Friday. Hope you got big weekend plans. 877-927-6648. That is the number to use if you want to give me a call, talk to me about this market. Don't forget my show airs every day on TFNN from 3 to 4 Eastern. If you can't listen live, don't worry about it. You can always get it as a podcast on iTunes. Don't forget you can listen to all TFNN programming on your smartphone. Very simple, very easy. Just open your smartphone browser, type in tfnn.mobi, and you can listen to the stream that way as well. I'll be going over some charts, as I always do. If you want to look at those charts live right along with me, use Tiger TV right on the homepage of tfnn.com. Channel 1, the show is carried live. It is archived in Channel 13. Tiger TV is also viewable on your handheld device as well. As far as I know, today is the final day of the Great Panther Silver TFNN Halloween giveaway. And if you haven't signed up yet, there's still time to do that right on the homepage of TFNN.com. Today, between 9 a.m. and 6 p.m. Eastern, only a few hours left, we're going to be giving away a free piece of silver. So be sure to register on the homepage of TFNN for your chance to win. Coming up at the bottom of the hour, I'm going to be joined by Brian Lund. He is the co-founder of Ditto Trade, and he is also an outstanding blogger. You can read Brian's posts at bclund.com. So looking forward to talking to Brian about his website at the bottom of the hour. Be sure to stick around for that. All right, let's take a look at the market. Not such a great day for the market here. Dow Jones Industrials. Let me do a quick refresh here, see where we're at. About 50 minutes left to go in Friday's session. The Dow right now near its session low, down 105 points or so, 0.8% to 13,127. Trading near its session low after hitting an intraday high of 13,289. S&P 500, let's see how that's doing. That's sure near its session low as well. Initial resistance at the 50-day moving average, the S&P 500 down about 9 points to 1418, and the NASDAQ Composite. Let's see what the NASDAQ Composite is up to. It is down 25 points, 0.8% to 2994, well off its intraday high of 3,033. Apple really having a problem here. I know we've been talking about Apple a lot. Been getting some tweets from people, stop talking about Apple, but it is very interesting what's going on with this stock. This has gone from America's favorite stock to a stock that right now looks like it's in trouble. It has given up its 200-day simple moving average. That's a long-term support level. Apple down $14.72 today, 2.5% to $581.82. So Apple certainly fueling negative sentiment in the market. Today really doesn't have the feel like unequivocal institutional selling. Yesterday on the NASDAQ, we had 1.83 billion shares trade hands. That was slightly above average volume today. NASDAQ volume tracking about 3 to 5% lower than that. So it's not like there's a big wave of selling behind the volume today. It is Friday. So maybe some traders have left early, but so far volume on the NASDAQ and New York Stock Exchange tracking below what we saw on Thursday. The major indices under pressure because of a strong dollar. U.S. dollar index recently trading at 80.52, up about 40 was that 47 ticks or so. Let's take a look at the U.S. dollar index. This is as of Thursday's close, but you can see the 200-day moving average for the U.S. dollar index at 80.63. So the dollar is still underneath that. I suspect it could be a resistance level in the near term. We'll watch how trading plays out in the U.S. dollar index. We haven't taken a look at the UUP. This is a ETF that basically tracks the dollar. Nice little breakout for the UUP today. It is up 16 cents, 0.7% to 22.08. And you can see it broke out over a swing point today, broke out over its 50-day moving average. It still has potential resistance to deal with at that 22.27 level, but certainly the strong dollar, not a friend of the stock market today. Strong dollar also not a friend to gold. Gold had a rough day. Gold for December delivery fell $40.30, settled at $1,675.20 an ounce. It lost 2.1% for the week, its fourth straight weekly decline. Let's check in on the GLD because well, we know that it had been underneath its 50-day moving average for about 5 or 6 days. Now it is getting close to its 200-day moving average here at 161.54. The GLD currently trading at 162.69, down a little more than 2% today. So rough day for gold. And crude oil today, 84.86 is the official settle, down at $2.23 for the week. Oil lost 1.7%. So that's a quick rundown of some of the metrics here in the energy space. We did have earnings from Chevron today, CVX. Let's check in on Chevron, see how it's doing today. This is an integrated oil company, of course. Earnings were down 31% from a year ago to $2.69 a share. Sales also down 10% from a year ago to $58 billion. You can see this is a stock that clearly has been consolidating gains, basing for a little while. Broke below its 50-day moving average, now looking like it's going to test its 200-day moving average at 106.66. Chevron right now down about 3.2% to 107.93. So it's little bit, about $1.50 or so above its 200-day moving average. So another integrated firm came out with earnings today. Hess Corporation. Hess, a lot of stock charts look like this today because the market was in rally mode for a little while. It was brief, but looked like it was going to be a nice session for stocks. But again, in a market that's under distribution where you haven't really seen a buy signal yet, is price action like this really that surprising? And my answer would be no. But Hess, after hitting an intraday high of 55.35, is now only up 28 cents to 52.93, trading near its session low. Hess, another integrated oil name. Earnings better here, up 49% from a year ago to $1.46. Sales were up 6% to $9.2 billion. Rising volumes out of its bacon operations, or Bakken. Never know the pronunciation of that. Bacon or Bakken shale. So results pretty good there. Didn't mention that Chevron, the results were hurt by the fact that they had temporary oil field maintenance at several locations, which reduced oil and gas output. So that could just be a one-off deal. Third quarter oil and gas production at Chevron fell to 2.52 million barrels in the third quarter from 2.6 in the year ago period. So that's what's going on there. Let's check on the financials here. The XLF, the Financial Select Sector Spider Fund. Financial still hanging in there. I've been talking about the strength in the financials, still holding above the 50-day moving average here. Some of my favorite names in the space, some interesting stocks. Signature Bank. This is a New York-based bank. Holding gains nicely here. It is only down 1.2%, not too bad considering the selling in the broad market today. Last trading at 71.27. When you look at a weekly chart for Signature Bank, you see still a pretty nice technical structure here. Big move last week, holding on to most of its gains, so it is showing strength and support. That's what you want to see after a breakout. But last week, Signature Bank broke out over a swing point of 69.28. This is still a bullish chart in the financial sector. And how about EverBank Financial? Ever heard of this bank? This is a bank that came public in May at $10 a share. Stock is right now trading at $15.76, up 10 cents on the day. They're based in Jacksonville. They recently reported a 48% rise in quarterly profit to 31 cents a share. This was, I believe, last week. I think it was last week their earnings came out. Sales growth of 31%. Pretty solid as well. But this is a new issue. It's a small cap, market cap of $1.8 billion, but has just been a tremendous price performer. Fundamentals clearly driving price performance here. Let's take a look at a weekly for Everbank, and we'll see a stock that is extended in price here. That's not Everbank. Come on, you can do it. Everbank. All right. Let's see here. Everbank Financial. There it is. Okay, so the weekly chart showing a stock that's pretty extended here, broke out in September over 12, 13 bucks a share. You know, a pullback to the 10-week moving average here down to that 1374 level would be an ideal entry point, but it would only be an entry point if big investors come in and support the stock at that support level. So wouldn't chase it up here, but if this broad market continues to weaken, a weak market tends to bring most everything down with it, so possible that Everbank could pull down to its 10-week moving average here at 1374 and find support. So a small cap financial that is definitely interesting to look at. All right, the jobs data earlier today. Non-farm payrolls up 171,000 from an upwardly revised 148,000 in September. Unemployment rate ticked slightly higher to 7.9%. That 171,000 job growth in October was better than expected. So I'm a bit surprised to see the market reacting the way it is, because I thought it was a number that the market would like. But, you know, again, we've been talking about the fact that there is, you know, there's been distribution in the NASDAQ going on since late September, not much in the way of institutional buying. So it's possible we still could see a buy signal in the market sometime next week. But today's action in the major averages, pretty disappointing. You can see day one of a rally attempt for the NASDAQ was last Friday. We're still holding well above that low, so today is still going to be the fourth day of a rally attempt. Monday will be day 5, so hopefully we see a big percentage gain and higher volume sooner rather than later. That would qualify as some sort of buy signal, maybe a signal to start nibbling at some stocks. A good example of a stock where clearly institutions are still hesitant to buy in this market. Let's take a look at shares of LinkedIn. I'll tell you what, this company reported earnings after the close yesterday, and I've been not been shy about calling LinkedIn a potential market leader. If this market can eventually get going, and we really do see meaningful signs that big money is coming in from the sidelines, I think LinkedIn does have the potential still to be a market leader. But pretty bearish price action in the stock today after hitting an intraday high of 115.40. It's only up 32 cents now to 107.17. Tried to get back above its 50-day moving average, reversed in heavy volume. So pretty bearish price action. We'll talk more about LinkedIn when we come back. You're listening to Breakout Investing on TFNN. We'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pezzamento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you at the bottom of the hour. Just after the bottom of the hour, I'll be joined by my friend Brian Lund, a great blogger and co-founder of DittoTrade.com. So we'll talk to Brian about his website. And folks, 2.5 hours left to register on the homepage of TFNN.com for the Great Panther Silver Halloween giveaway at, let's see if I'm on the West Coast, and I always get this time change wrong. So, be 4 o'clock and 5 o'clock. We're going to be announcing 2 more winners. So you still have time to register to win a free 1-ounce piece of silver. So beautiful silver coin from Great Panther Silver. We do have this hour's winner on the line, a gentleman named James Porter, fellow California resident from Petaluma. James, are you there?
I am here.
Well, congratulations, sir. You're going to win a beautiful 1-ounce silver coin from Great Panther Silver. Are you somebody that tends to win a lot of things in life, or not so much?
Well, not so much generally.
Okay. And are you? Would you, James? You describe yourself as an active participant in the market? Obviously, you registered at TFNN.com, so you have some interest in the market. What's your specialty?
I'd say fairly active.
In stocks, bonds, futures, options. What do you like to dabble in?
Usually stocks, some options.
Okay. And what do you think about the market action today? We got a beautiful jobs report, or a pretty decent jobs report before the open. Looks like it's going to be a nice day for the market. And here we go down near session lows. Surprising action to you, or not so much?
Not too much surprising. I didn't expect to see anything all that good today. But
and optimistic about a good year for stocks in 2013. What do you think?
Yeah, probably after the first part of it, I think it will be.
Okay. Well, James, I appreciate you listening to TFNN, and congratulations once again on winning that beautiful silver coin from Great Panther Silver. Appreciate you listening.
Well, thank you very much.
Okay, James, take care.
All right.
All right, James Porter from Petaluma, California. So we'll be announcing another winner, 4 o'clock Eastern, and another winner at 5 o'clock Eastern. So it is a beautiful silver coin, folks. Let me tell you. So go ahead and register and see if you can get in there right at the end. All right, before we went to break, we're talking about LinkedIn. Very, very strong earnings from this company. Very real growth story going on here. Online professional network now boasts 187 million members. That was up 7% from the second quarter. Earnings at LinkedIn up 267% from a year ago to 22 cents a share. That was double the consensus estimate. Sales up 81% to 252 million. That was also nicely above estimates. How does LinkedIn make money? Well, the good thing is that they are not heavily reliant on advertising like Facebook is. LinkedIn has 3 business segments. They get the majority of their revenue from talent solutions. That soared 95% from a year ago to 138.4 million. Companies pay LinkedIn to find them good talent. Companies, headhunters also pay LinkedIn as well. So Talent Solutions doing very well, 138 million in revenue there. They have a market solution segment that sells ads. Revenue there only 64 million, but still up 60% from a year ago. Premium subscriptions up 74% to 49.6 million. So this was a bullish conference call. I do think LinkedIn does have the potential to be a market leader, but again, we're just in a market where you see a stock like this that hits an intraday high of 115.40 and reverses and is down near its session low on numbers like that, just tells me pretty clearly that big fund managers, growth managers in particular, still hesitant to put money to work in this market. Perhaps once the election passes, less uncertainty about who's going to be the president of the United States. Maybe that will bring some money in from the sidelines, but still overall a fairly risky environment here, particularly for growth stocks. Starbucks, much better price action in Starbucks today, although this is a perfect example of a stock that's still building a base, but hard to really do technical analysis on a stock like this with just such a huge gap up. Shares recently trading around 51 to 15, up 9.7% on the day. I definitely looked at Starbucks as more of a broken stock ahead of earnings. Certainly there was been a lot of sellers in Starbucks. Started to rally earlier this week on Wednesday and Thursday, but a huge move for the stock today. Starbucks doing very well. Earnings up 24% from a year ago to 46 cents a share. Results helped by sales of non-coffee items like juice, tea, energy drinks. Same-store sales in the U.S., Canada, and Latin America up 7% in the quarter. Global same-store sales up 6%, a little better than expected. So good numbers from Starbucks. Coming up next, joined by Brian Lund, dittotrade.com, and also bclund.com. We'll be right back, folks.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. TFNN and Great Panther Silver have teamed up for another exciting silver giveaway. The Great Panther Silver Halloween giveaway will be taking place at the end of October, and for 3 full days, we'll be giving away silver coins and bars every hour from 9 a.m. till 6 p.m. to one lucky winner randomly chosen. There's no purchase necessary. For more information and to fill out your registration form today, simply visit the front page of TFNN.com where you'll find all the details. October 29th, 30th, and 31st, we'll choose one lucky winner that will receive a silver coin or bar courtesy of Great Panther Silver. Winners will be announced live on the air each hour for 3 full days. Don't miss out on this great opportunity to win free silver from TFNN and Great Panther Silver. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, everyone, to Breakout Investing on TFNN. Ken Shreve with you. About 25 minutes left to go in Friday's session. Quick check on the markets here. Kind of a not-so-good session taking shape here after early strength. Right now, the Dow down 134 points, 13,098. NASDAQ Composite down close to 32 points, 2988. And the S&P 500 down 12 points, almost 0.9% to 1415. Okay, joined right now by a gentleman named Brian Lund. Two websites that you want to check out that are associated with Brian. He's got a great blog at BC Lund, BCLUND, BCLund.com. He describes the blog as an intersection of markets, trading, and life. with some punk rock, pop culture, and offbeat humor mixed in. Great post today, why CNBC appearances are child's play. Brian is also the co-founder of DittoTrade.com, and we're going to talk about that website with him today. Mr. Lund, how are you today, sir?
Ken, I'm doing good. I just want to tell you I really enjoyed speaking with you last weekend at the Stocktoberfest event down in Coronado. And I appreciate you having me on the show. But I'll tell you what I really appreciate. I appreciate that Doors bumper music, because so much of trading is all East Coast focused, and us West Coast traders need some representation, so I appreciate that.
Okay, man. Well, that sounds great. Nice meeting you last week. Brian and I attended the Stocktoberfest put on by Howard Lindzen from StockTwits, and that was a very well-run event and got to meet a lot of great people, including Brian. So I wanted to get you on the show as quickly as possible. Brian, I wanted to talk to you about DittoTrade.com. You are co-founder of this company. First of all, when did the idea... Well, I don't know. Should we talk about what Ditto Trade? Why don't we start by talking about what the whole concept behind Ditto Trade is for starters, and
Sure.
Proprietary trading technology and a whole bunch of good stuff. Why don't you tell us about Ditto Trade?
Yeah, well, to start off, Ditto Trade is a regular registered broker-dealer, just like any broker-dealer. But we've created a proprietary technology, and what it allows is it allows for any trader to take part in the exact same trade as any other trader, and we call that trader a lead trader. And when I say take part in the exact same trade, I don't mean copy the trade or mirror the trade. What happens is you actually are attached to the exact same block as the lead trader. And once you're in a trade with that lead trader, you have basically three options. One is you can let the lead trader manage the trade to conclusion. Two is you can close out your portion of that block at any time at market just by clicking close market. And then the last option is you can actually click detach, sever your portion of that block from the lead trader's control, and then take over management of that trade yourself. So we think it's the final link between that social front end of trading where people talk about trading and get their ideas together, and that executional back end where people are really part of the trade.
When Brian was when was the idea launched for Ditto Trade? Has this been a long time in the making, and when did the idea first come around? And was it your idea, or were you working with a team of people? How did it come to fruition?
Well, the idea came out of the carnage of 2008, and I was talking with a friend of mine, Joe Fox, and Joe Fox's background is he started one of the first online brokers in the 90s called Web Street Securities, and they were a really forward-looking broker that had some of the best technology and customer service. They eventually got bought by E-Trade in 2001, and Joe and I would talk from time to time. Joe was, he's more a business guy. He wasn't so much of a trader, but he would ask me about my trading, and I'd tell him what I was doing, and he said, gosh, I wish I could take part in one of your trades. And we kind of laughed, and then it was like, I wonder if you could do that. And that was kind of the genesis of the idea of Ditto Trade, and it's all aimed at taking technology. Technology these days we hear so much is used against the retail trader. You've got high-frequency trading, algorithmic trading. We're trying to think of a way that you could turn technology around to help the retail trader, to get those people that are on the sidelines, that are scared, that got burned in 2008, that don't want to put their feet back in the water, how they could get paired up with basically a virtual mentor and kind of ease themselves back into the market, and that's how Ditto Trade came about.
So if people want to check out Ditto Trade, they just go to DittoTrade.com. I know, but when people buy a stock or they follow a lead trader, I mean, it does. You have pretty inexpensive trades. I think $6.95. Do I have that right?
Yeah, you have $6.95 a trade, and you can go to DittoTrade.com. You can also go to our sister site, which is called Followable, like following someone, followable.com, and that's where you could either sign up to be a lead trader if you're a trader, you think you've got a good methodology and you'd like to offer a subscription service, or if you're looking to find a lead trader that you could follow, you can go there and you can search for different lead traders by asset class and style. So basically DittoTrade.com or followable.com.
Good deal. Well, I read the post today at bclund.com, why CNBC appearances are child's play. And, folks, anytime Brian posts something at his blog, you never know quite what you're going to get, but a lot of times you're going to get a very funny post, and the CNBC post today was a great one, so I would urge people to check that out. Brian also contributes at a site that I contribute to, TraderPlanet.com. And, Brian, you had an article there recently talking about risk management. You've been involved in the business for quite some time. What do people miss most often about risk management? Is it something I would suspect that most traders, especially kind of newer traders, don't think a whole lot about, but they probably should be, right?
Yeah, I mean, trading in general has so many misconceptions, and so people come in with these preconceived misconceptions. They don't know where to start. One of the biggest areas, of course, is risk management. And the fact of the matter is most people don't have any risk management, and they don't have any methodology. I hear people talk all the time about, I'm going to take a position in Apple. Well, what size? I'm going to buy 1,000 shares. Well, does that 1,000 shares have any relation to the size of your account? Does it have any relation? Is there any relation to the charts in terms of risk? So I think the biggest thing that people miss out on is they miss out on taking trades that have a favorable risk-reward ratio setup. And if you don't take trades that at least have a 1 to 3 risk-to-reward ratio setup, chances are you're going to end up blowing your account out before too long.
Gotcha. An earlier article that you did at TraderPlanet.com that was also very interesting, what it takes to be a successful trader. Can you just outline a couple of the key points that you raised in that article? Because it was a very good one, and I wanted just to share with listeners, what does it take to be a successful trader? What sort of personality traits do you need, for example?
Well, in that post, I was talking about stick-to-itiveness when it comes to following stocks and keeping them on your radar. But that can be broadened a little bit to say that, it's hard to be a good generalist in anything you do, whether it's trading, whether it's blogging. I mean, if you try to blog about everything under the sun, nobody's going to be interested. You want to be a niche blogger to get an audience. It's the same thing in trading. You can't, most people, from my experience, they can't trade Forex and options and equities and swing and day and all sorts. They need to find some sort of niche that's their niche, and they need to get really good at that niche and just focus on doing that over and over. And I think what happens with so many traders is they start down a path. I'm going to be a gap trader. I'm going to trade only gaps. And maybe it doesn't work out exactly how they think in the beginning, so they go, I'm going to swing trade. And that doesn't work out, and they say, I'm going to do futures, and I'm going to do equities. And they jump all over the place, and they're chasing success. So I think that what you have to do is you have to focus on what sort of trading is best for your personality, and then just keep doing it over and over again and get good at it and just specify in that type of trading.
I know I've met so many people over the years, Brian, that I just know they're never going to be cut out to be good investors or even good traders, because there are so many people that get mad at the market, or they get mad at somebody else when they lose money in a trade, and they can never hold themselves accountable. They didn't cut a loss short, or they didn't, they weren't following a strict set of rules. But I would say that, one thing you have to be, whether you're a successful trader or an investor, you have to try to be as unemotional about it as possible. It's hard for most people to do, but I meet so many people out there that, they lose confidence quickly, or they just get mad at the market, when they lose money in a stock.
Right, and part of that, the reason that people get so emotional is because everything about being a trader, and especially being a successful trader, goes counterintuitive to what we learn in the rest of our lives. If being a trader involves being wrong about 70 to 80% of the time, okay? But when you're wrong, you take your short little quick losses and you let your winners run. That's so counterintuitive to most things that people do. Nobody likes to be wrong. And if you tell a new trader, guess what, you're going to lose on 7 out of 10 of your trades, but you could still make money. They just can't process that. And it's strange to me, because they understand it when it comes to baseball. If you bat 300 in baseball, you're a great player. But for some reason in the markets, people just they think that they need to be right all the time, and the fact that they're not right all the time creates all this frustration, it creates this emotion, and that's when people do what you were talking about. They get mad, they lash out, they do bad trades, and they blow their accounts up.
Yeah, I mean, the market has always been counterintuitive. It will be counterintuitive when everybody is slanting, bearish. That's the time when market bottoms tend to be put in. Brian, I wanted to get your take on third quarter earnings season. Last night we saw, a bunch of good earnings reports. Earnings from LinkedIn, Starbucks I was talking about earlier in the show, Priceline, TripAdvisor, a whole bunch of good earnings reports. What's your take on third quarter earnings season overall? It started pretty shaky. We got real bad numbers from IBM and not so great results from Google, but since then, it hasn't been too bad.
Yeah, I think the problem was that a lot of the bar was set already really low for a lot of the earnings, especially in the early part of the earnings season. And when companies couldn't even get to those low bars, I think that disappointed a lot of investors, and that's kind of what started the selling. I think the other thing that we have to factor in here is that we have the election looming, and I think that is kind of overshadowing earnings as well. I don't think the market, it doesn't matter to the market so much whether it's a Democrat or Republican. I mean, technically you'd think Republicans would be better for business, but I've seen studies that say the market does better under Democrats. But what the market doesn't like is it doesn't like uncertainty. And I think it just wants to find out who's going to be, in the presidency, what policies are going to be in place, and then the market will adapt, and it always does that. The market's always taking in data, whether it's political data, whether it's economic data, whether it's earnings data, and it's just churning it up, and it's repricing itself. So I think we just got to get past, next week before we can start saying anything about where the market's going to go, especially in relation to earnings. Yeah, definitely a layer of uncertainty removed once the election passes. I'm optimistic that we could very well see some sort of buy signal in the major averages between now and the end of the year. Hopefully sooner rather than later. But if we do see that, it's most likely going to come after the election. Before I let you go, Brian, I did want to get your take on Apple. I mean, it was a $700 stock not that long ago. The selling is pretty intense today. Are there problems at Apple outside of this management shakeup that we just heard about? What do you attribute the recent selling to? And is there maybe a bigger problem going on here that long should be concerned about? Well, I'm pretty much a technician when it comes to trading. I try not to get into the macro or the economic issues. I just want to see what the price and volume's telling me. What I was telling people today, and I'm watching Apple tank right now, is I would love to see a big gap down on Monday, and then I'd be looking for a massive volume spike on a 5-minute chart. Usually that is, to put it unbluntly, the puking out of shares from perma-bulls. And if I saw that and I could get maybe a nice hammer on a 5-minute chart, I think that would be a point where you could actually get long for a bounce and you'd have your risk reward defined by that hammer. Beyond that, I love iPads, I love iPods, so I can't really talk too much about the macroeconomics of the company. Yeah, no, that's exactly what I wanted to hear, because I'm mostly, when it comes time to sell a stock, I mean, the professional selling, the institutional selling in Apple really started to happen in late September. So there were early opportunities to get out of this stock if you paid attention to, or if you knew how to recognize distribution in a chart. But yeah, I mean, this thing, down 21 points right now to 575. It has taken out its 200-day simple moving average with conviction. So we'll take a look out and see if this thing can bottom pretty soon. Brian, listen, pleasure to have you on the show. I hope you have a great weekend, and best of luck with DittoTrade.com. And folks, DittoTrade.com is where you want to go to check out this trading service. And I'd also urge you to check out BC Lund, BCLUND.com. That's where you can check out Brian's blog post. Really appreciate it, Brian. Thanks so much. Hey, thanks for having me, Ken. I appreciate it. All right, take care. Bye-bye. All right, thanks to Brian Lund from DittoTrade.com and BC Lund. Folks, I'm not exaggerating when I say that Brian is one of the best bloggers around. I mean, he's a great writer. He's a witty writer, very funny, and puts serious stuff up on his post, and he's also very funny too. So his blog post today, why CNBC appearances are child's play, is just a great example of his fine work at bclund.com. So thanks again to Brian Lund. We have about 10 minutes left to go in Friday session here, and Apple, down right at its session low. Like I said, last down around 21 points. It is bleeding badly here. The major averages, the Dow right now down 1.1% to 13,089. NASDAQ down 1.2% to 2983, and the S&P 500 down a little less than 1% to 1414. So disappointing day for the market, and pretty good jobs report earlier today. Some good earnings reports after the close Thursday, but not enough to help this market that remains under distribution. Hopefully see some buyers come into the market next week. Headed into the final break. Ken Shreve with you on Breakout Investing. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, everyone, to Breakout Investing on TFNN. Let's talk about some other movers today. We also had good earnings from Priceline. Last check, Priceline was holding up pretty well despite a mini sell-off in the market today. Big gap up for Priceline, but it is trading near its session low, still up 8.7% to 637.31. The story here was stronger than expected international bookings. Earnings at Priceline up 25% from a year ago to $12.40 a share. The estimate was for profit of $11.81. Sales were up 17% to $1.7 billion, also above expectations. The stock did get an upgrade from buy to buy from hold at Stifel Nicholas. Now, one thing about Priceline that you notice when I'm looking or considering stock for purchase for the Ultimate Growth Stocks model portfolio, accelerating sales growth, accelerating earnings growth, accelerating sales growth is really, really good to see. That shows you that demand is strong for the company's products. It's usually an indication of outstanding fundamentals, and if there's a bullish chart that goes along with those outstanding fundamentals, those are two key pieces of the puzzle. But what you see with Priceline is multiple quarters in a row of decelerating sales growth from 35% to 28% to 20% to 17% in the latest quarter. So that is not the best of signs, and it's a reason why I'm not real keen on owning the stock here. Strong day notwithstanding. So pretty good numbers. Numbers were a pleasant surprise for the market. Priceline up about 8.7%. TripAdvisor.com, TRIP, much more speculative name than Priceline. TRIP is the ticker symbol here. Market cap of $4.5–5 billion thereabouts. Another stock that has been beaten down in price pretty much since the summertime, but a nice gap up for TripAdvisor today, up close to 20% to 35.20. Fairly high short interest in this name, so most likely a lot of short covering going on in the stock today. TripAdvisor is an online travel review site. Earnings were up 12% from a year ago to 46 cents a share, 4 cents above views. Sales up 18%, $212.7 million. That was also slightly above estimates. The results were helped by gains in advertising and subscription gains as well. Data center services provider EQIX, Equinix. High quality name here. Here's another chart showing a stock well off its session high. Equinix hit an intraday high of 196.98. It is now trading near its low at 190.38, still up 3.7%. Decent numbers here as well, with earnings up 200% to 57 cents a share. Sales up 20% to $488.7 million. Don't have a chart for Restoration Hardware. Nice debut. IPO for Restoration Hardware. This company is kind of rebranding itself. I used to love going into Restoration Hardwares and still do, but it's kind of a different brand, more of a luxury brand now. So they came public today. Was supposed to price between 22 and 24, priced at the high end of its range last night at 24 bucks a share. Recently trading at $30.83, up about 28.5% on the day. So obviously some optimism about business prospects for Restoration Hardware, a home furnishings retail chain. And Whole Foods Market having a good day at one point. Let me see how it's doing now. Yeah, trading near its session low, but still up 3.1% ahead of its earnings report next week. And pretty quiet week of economic data next week. We've got earnings on Monday from CF Industries and Express Scripts. Also earnings from Qualcomm and Walt Disney next week as well. Coming up next, the Tom O'Brien Show, 4 to 6 Eastern. Have a great weekend, everyone. I'll see you back here Monday for another edition of Breakout Investing, 3 o'clock Eastern. Have a great one.